Hey, welcome to the exchange. So last Friday, American Airlines actually raised revenue guidance and raised cost guidance. Let's look at what the actual 8K says and how this will affect their income statement. So this is their 8K they filed. If you're not familiar with an 8K is, it's just a material public filing. This is how they basically raise or lower guidance through the 8K form. But scroll down here real fast. So this is the actual revenue guidance update. So this is looking at second quarter 2022 versus second quarter 2019. Right hand side you have the prior, left hand side you have the updated. So let's go through it line by line real fast. So number one is available seat miles. All that really means is capacity. It's basically seats flown 1 mile times the total network itself equals the capacity. They were expecting, -6% and -8% versus 2019. Now they're expecting basically -7% and -8%. So basically what that means, they're flying at roughly 92% capacity, give or take there. And then most of that capacity kind of shortfall is the actual international travel or wide body travel, etc. So the actual domestic network itself actually is pretty healthy and it is pretty strong across the board. Look at the next line here, total revenue side. So it's looking at here, they're expecting 6 to 8% uptick versus 2019. Now the actual update itself is 11% to 13%. I mean, that's just a massive, massive jump in actual in-a-quarter guidance there. Let's go to the next line here. It says TRASM, which TRASM is total revenue per available seat mile. Basically, it's looking at, hey, an actual seat comp basis, what's the actual revenue growth rate right there? So what we're seeing right here basically is prices themselves per seat on average are up 20 to 22%. I mean, these are massive increases in 2-3 years or so. Now look at actual prior guidance here of 14 and 16%. I mean, even since the last month and a half, 2 months or so, it shot up another 6% or so. I mean, these are just massive increases. It really in a matter of 2 months. But I mean, if you go on any kind of airline website, look at travel right now for any kind of summer travel. I mean, prices right now are absolutely sky high, and we're seeing that across the board. So let's go to the next line here. This is CASM, excluding fuel and net special items, which CASM, all it means is cost available or cost per available seat mile. Looking at prior guidance, it's 8 to 10% higher than Q2 2019. Looking at updated, it's 10 to 11%. So basically all it's saying is, hey, 2 to 3% increase, and basically what they were expecting. Really the most important line look down here is on the cost side is actually average fuel price. So they're expecting on the high side for prior guidance at $3.64 per gallon. Sitting right now is $3.97 per gallon, so it's roughly a 10% increase, which, I mean, it wouldn't shock me if in late June this was like $4.15, $4.20, if not more potentially for the average fuel price itself, which they won't raise guidance again or change guidance again, probably told the actual earnings call itself. But again, this is something to keep an eye on here, because this is by far their biggest cost, basic cost factor they have right there. Now, the interesting part to look at here is actual pre-tax margin itself here. So you think, hey, costs are crazy right now, inflation, fuel price inflation, etc. is crazy right now. They're actually increasing guidance on the actual pre-tax margin itself here. So looking at prior quarter or prior guidance here, 3 to 5% basically pre-tax margin versus 2019 increasing. Looking at here for updated 4 to 6%, which is not that much though, but it's heading in the right direction overall too, which is very surprising though too. And it shows you, hey, the actual TRASM and total revenue kind of guidance numbers are going up so high and so fast, which is basically negating all these CASM increases as well as the fuel increases. So if you watch my last video, this model is pretty familiar. Basically, I updated the revenue guidance, updated all the cost guidances, etc. I'm looking at roughly right now for a second quarter, which one right now of 2022, I'm saying $13.3 billion. Now, the old model, actually, I have it right here. It was actually $11.3 billion of basically interquarter revenue. But looking at here, I mean, looking at the actual aircraft fuel and expenses, I'm saying right now $4.3 billion, given on their projections, their guidance. The old guidance was 3.9 billion. So again, this might be an undershoot though. I mean, this might be at 4.4 or 4.5 billion dollars by end of June. It absolutely wouldn't shock me there, but again, that's what we're going off of right now. Looking at salaries and wage increases, those will all increase across the board. Landing and rent fees, or should be pretty steady given the actual capacity is pretty steady overall too. Aircraft rent, selling expenses, etc. Now there is this massive other bucket here, which is $1.4 billion interquarter, which is kind of the shadow bucket, which I don't like how they do that because it's just a massive bucket and it's not very transparent kind of what it actually is and what it actually pertains to. But I pulled this actually from their 10K, their actual annual statement itself here too. So looking at other operating expenses, increased 569 million or 79.5% in the first quarter of 2022 from the first quarter of 2021, primarily as a result of increased capacity and expenses associated with improving our product offerings, customer experience, and operational reliability. It's kind of vague what that means, but it's really just a catch-all bucket for just, I guess, improvements, I guess, maybe, but it's really a vague bucket there too. But looking at here, looking at actual total OPEX expenses is $13 billion, total revenue of $13.3 billion. So I'm saying, hey, operating profit right now, it should be at roughly $300 million of operating profit, which is absolutely fantastic. Because you look at last quarter here, operating loss, it was $1.7 billion. So they basically saved in a way, or increased their actual, midline roughly, $1.4 billion in a quarter, which is great. So let's take that $300 million of operating profit. Now, they will not be net income profitable just because they have a massive interest expense here, roughly negative, $400 to $500 million. So if I had to guess, looking at net loss here, probably somewhere in the negative $100 million range on the bottom line basis, which sounds very, very bad though. But look at Q1 of 2022, it was negative 1.6 billion. So they actually increased their bottom line by $1.5 billion, which again is fantastic though too. Now, if at any point fuel prices drop, we have a resolution of the Ukraine crisis, etc., and this fuel prices come down, this company, I'll give them the revenue base they have here and give them the actual fuel expenses they have here, and they can become very, very, very profitable very, very fast. So just keep that in mind for both Q2 and Q3 and Q4 for the rest of this year. Hey, but that's American Airlines, and really the revenue growth rate has really absolutely shocked me, and I'm really curious what guidance will be for Q3 and Q4 of this year. But yeah, if you like the content overall, be sure to sub the channel right there. Also drop your comments about the airline industry, kind of where you see this going potentially, either bullish or bearish overall. But yeah, that's the exchange.